Hi students, good evening. I am recording a session on working capital management for CA and CMA inter exams, and this session is equally important for both the students, and it is a rapid session. Will cover various concepts and few sums from both CMA and CA materials. Now it comes to working capital. We should know what is working capital. Working capital is nothing but there are two working capital, we can say gross working capital and net working capital. Gross working capital is the total of all current assets. Gross working capital is the total of all current assets, and net working capital means it is gross working capital minus current liabilities. So basically, whenever we talk about working capital, we call it as net working capital, that is current assets minus current liabilities. Only current assets if I take, it is called gross working capital, and if I deduct current liabilities from the current assets, it is called as net working capital. And why this chapter is very important, what are all the concepts covered in this chapter, and why this chapter looks a bit difficult, but it's a very simple chapter to present, that we are going to discuss going forward. Now, when I say current assets, what are the current assets? If we can list, we have current assets like stock. Stock in the sense, your stock is again raw material stock, WIP stock, and finished goods stock. And you have receivables. Receivables is nothing but what? Debtors and bills receivable. Right. And we have cash. Cash again includes cash in hand, cash at bank. So these are all current assets, and you have a prepaid expenses. Whatever the expense prepaid comes under the current assets, right? So we have current assets. Majority of the questions you have current assets like stock, receivables, cash, and prepaid expenses. Moreover, advance tax. So based on the question, you can see the balance sheet. Our balance sheet is actually divided into four parts, right? Number one is non-current liabilities, including equity, then current liabilities, and non-current assets, including investments, which are non-current, and current assets. The four boxes is our working capital. The boxes at the end, the left and right, these represents current assets and current liabilities, and the net of it is net working capital. It is nothing but CA minus CL. Similarly, when you talk about current liabilities, what is the major current liabilities? Payables. Payables again, trade payables, under which sundry creditors and bills payable. Most important payables is sundry creditors and bills payable, trade payables. Apart from trade payables, you have outstanding expenses such as rent, salaries, and other expenses. This comes under current liabilities. And one more important thing we should note here is provision for tax. We actually not a current liability, it is a short-term provision which should not be dealt in the current net working capital statement. Right, these things we should write it provision for tax as a short-term provision. So there are a lot of things that we will discuss while going in depth into this chapter. Now, as we know, net working capital represents current assets minus current liabilities. We also need to understand few things, how the current assets are actually computed. Say, what is that? Now, there is something called operating cycle of a manufacturing company. Mostly, working capital is mostly in respect of manufacturing, because we have raw materials and stuff. So what we need in operating cycle is, we buy raw material, right? And then This raw material goes to work in progress, and this work in progress convert into finished goods, and the finished goods will be sold, which means credit sales, and the credit sales will be collected, received, and the receipts must be again reinvested in purchasing the raw materials. It's a cycle. So this entire cycle is called gross operating cycle. Gross operating cycle. So this cycle, how do we compute here is raw material days plus work in progress days plus finished good days plus average collection period. That means how many days the debtors will take you to receive the money minus average payment period. So it is, in simple terms, they write it as R plus W plus F plus D minus C. Your R represents number of days raw material is in stock before giving it to production. How many number of days your raw material is in stock, that much of money is blocked this number of days. Similarly, number of days work in progress, like number of days stock is in process before it is getting converted to a finished good. And then your F represents number of days finished goods lying in the godown before they converted to sale. And then your D represents average collection period from customers. After the sale, you should collect the money. Collect the money from customers. It will be a time period, 30 days, 45 days, 15 days. That many days your cash is blocked. And then C, average payment period to creditors or suppliers. So your net operating cycle is R plus W plus D, F plus D is your gross operating cycle, and gross operating cycle minus creditors payment period is net operating cycle. So suppose raw material is in stock for 10 days, WIP in progress for 5 days, finished goods or in the godown say for 12 days, debtors taking say 13 days to pay, and your creditors gave 20 days credit period. So if these are the days given in the question, what you can say, my net operating cycle is 10 plus 5 plus 12 plus 13 minus 20. So my gross operating is 15 plus 25, 40, and my net operating is 20 days. So this is the way we should read the question, gross operating cycle and net operating cycle. Now the challenge is, how do you get these dates? For this, we should understand each and every formula. How do I compute what is raw material days, what is working capital days, what is finished good days, and what is sundry debtors days, and what is my average payable period days. If I compute all the days, I can convert into a formula. That formula is nothing but R plus W plus F plus D minus C to get my net operating cycle. So this net operating cycle is the final answer. Once you get the net operating cycle, what you can say, how many operating cycles are in a year? If someone asks you how many operating cycles are in a year, we can simply say number of operating cycles equals to number of days in a year by net operating cycle days. So in this case, assume a year is 360 for the purpose of mathematical simplicity. So this is number of days in a year and your NOP is 20 days. So you have 18 cycles. Means 18 times the stock is rotating. Raw material to WIP, WIP to finished goods to debtors, debtors to again collection, again back to the raw materials. So the more the operating cycles, you'll have more revenue, because the more number of times the money rotates, it generates more business. You're doing great. So if it is little less, then there is a concern because your working capital struck. So 20 days, in the sense, not even a month, you're able to regenerate your funds which are invested in the business. So this is all about the basic understanding of operating cycle. Now we move to know how do I compute operating cycle days each item. Now what exactly we are learning is computation of raw material days, working capital days, finished good days, and average collection period and average payment period. Formulas are like this. Number one, raw material days. Average raw material stock divided by average raw material consumption per day. Per day means average consumption per annum divided by number of days. Per day calculation is, how do we do the per day calculation? Per day calculation, average raw material consumption per day equals to average raw material consumption per annum divided by 365. If the question gives, assume the year as 360, you should take the day as 360, otherwise generally 365. So average raw material stock divided by average raw material consumption per day, you will get raw material days. Similarly, second one is about working capital days, work in progress days. Your work in progress days is average WIP stock divided by average cost of production per day. So total cost of production divided by number of days. You'll get average cost of production. And the third one is your finished good days. Average finished good stock divided by average cost of goods sold per day. The per day is total cost of goods sold divided by number of days in a year. The next fourth one is average collection period. That is average credit sales, average receivables divided by average credit sales per day, and creditors payment period equals to average payable divided by average credit purchases per day. Per day is nothing but total credit purchases in a year divided by number of days. So once we can say here it's only raw material consumption divided by number of days. So everything cost of production divided by number of days, you'll get cost of production per day, cost of goods sold divided by number of days in a year, you'll get cost of goods sold per day, credit sales divided by number of days in a year, you'll get average credit sales per day, and credit purchases divided by number of days in a year, you'll get credit purchases per day. Once you know all these things, you can simply write raw material days plus work in progress days plus finished good days plus debtors collection period minus creditors payment period. You'll get your net operating cycle. The very important question, and this question repeatedly comes in the examination. So we need to understand the formulas, write the formulas. If the thumb rule here is, if number of days in a year is silent, then consider 365 days. If number of days in a year given as 360, then take 360 only. At that time, don't use that, year means 365 days. Let me take 365. No, just go with the question, what they asked. Right. This is all about the understanding of how do you compute the number of days for each item of net operating cycle. So as discussed about the operating cycle and its computation, let us see how do we compute if a question comes in the examination and how do we present the question in the examination. So first thing here, raw material consumed, cost of production, cost of goods sold, credit sales, credit purchases. Data is given at various levels, and raw material inventory means holding period average, average WIP, average finished goods, average debtors, average creditors. Data is given, and now they want us to compute what? Raw material storage period, WIP period, finished goods period, debtors collection period, and creditors payment period, and net operating cycle. This is the data given and asked us to compute the total net operating cycle. So based on the information, now what we should do? We should compute the net operating cycle. First, what is the first one? You have raw material consumption days. So the formula is average raw material stock divided by average raw material consumption per day. So if you see, average raw material stock given here is 75 lakhs by average raw material consumption per day is overall raw material consumed 600 and per day is 365. If you compute this, it is 75 divided by 600. Number of days in a year is given, nowhere it is given. So we go with 365 only. 600 divided by 365, 1.64. So 75 divided by 1.64, you get 45.7 days. I'll take 46 days. Any day 0.5 से ज़्यादा more then you will take it as next. So the first one we computed. Now the second one. Second one, what they said is average work in progress. I should compute work in progress. This is raw material days. Now we'll do work in progress days. Average work in progress stock is 90 lakhs divided by cost of production per day 900 by 365. So 900 by 365 is 2.46. So it is 90 divided by 2.46. I'll get 36.5 days. I'll take it 37 days. So working capital days are 37 days. Now next one given is what finished goods inventory. So I should compute finished good days. So finished goods inventory given in the question 110 and cost of goods sold is 1000. Cost of goods sold per day 110 divided by 1000 divided by 365, 2.74. 40 days. So we computed raw material days, we computed work in progress days, and we computed finished good days. Now what we should compute here is average collection period. We have given credit sales and you are given average debtors. So this is average collection period. Average debtors divided by credit sales per day. So debtors in the question is 150 lakhs by credit sales 1200 lakhs. So 1200 by 365. So 1200 by 365, it is 3.28. So 150 by 3.28, you get 46 days. And finally, creditors payment period days. So for creditor payment period, you should know average creditors divided by credit purchases per day. So what is your average creditors? 80 lakhs and your credit purchases per day is 500 by 365. 80 divided by 500 by 365. So 500 by 365 is 1.37. 80 by 1.37, you'll get 58 days. Now you have all the data. It is, you have raw material days 46 and you have work in progress days 37, finished good days of 40 and collection period 46 days and payment period 58 days. So with this, what we can do here is we can compute net operating cycle, which is raw material plus work in progress plus finished goods plus debtors minus creditors payment days. So your raw material is 46 plus work in progress 37 plus finished goods 40 plus debtors collection 46 minus creditors payment is 58. So gross is 46 plus 37 plus 40 plus 46, 169 minus 58. So 169 minus 58 is 111 days. 111 days is your net operating cycle days. So this is how you should present in the examination. All these things, these are all working notes, and your final answer is net operating cycle, 111 days. If someone asks you how many operating cycles, simply you can do number of days in a year, 365 divided by net operating cycle, that is 111. So 365 divided by 111 is 33 operating cycles. 33 operating, 365 divided by 111 is 3.3 operating cycles. 3.3 operating cycles. So this is the simple solution to compute operating cycle if the examiner asks you about computation of each and every component of operating cycle. So the summary of this entire exercise is, if we really want to discuss, we should say for raw material, we should use raw material consumption per day. For WIP, we should use cost of production per day. For finished goods, we should use cost of goods sold per day. For debtors, we use average credit sales per day. And for creditors, we use average credit purchases per day. So we need not even remember the formulas. It is very simple. Raw material stock divided by average consumption per day, and WIP stock divided by cost of production per day. Finished goods, average finished goods divided by cost of goods sold per day. Every stage, raw material, only raw material. WIP, you get cost of production. And then finished goods, you should take complete cost of goods sold. And then your debtors, it should be average credit sales per day. And your creditors, it should be average credit purchases per day. If you know the cost sheet, the flow only you should remember. And ultimately it is RM days plus WIP days plus finished good days plus collection period minus payment period. That is your net operating cycle. And these questions comes regularly in the exam, maybe alternative exams or as a bit question also sometimes. So but the concept is very clear that you need to know what is gross operating cycle. Gross operating cycle means how many days the money is struck at raw material stage, WIP stage, finished good stage and credit sales with customers. Gross period minus the period allowed by your suppliers to make the payment, that for that payment you don't need money. So the overall days, how much your working capital means your rotatable money is struck. You should have that much money in your hand so that you can operate freely. So working capital management is mostly depends on how do you reduce the operating cycle. The lesser the net operating cycle, the more the number of operating cycles, and the more the operating number of cycle, your dependency on working capital funding will be reduced drastically, and then you can make better margins. As the fixed cost is constant, rotating the cycles number of times in a year actually makes you to achieve higher profit than the less number of operating cycles. This is the importance of working capital cycle. We can call it as net operating cycle. The next we'll understand how do I prepare a working capital statement. So what is called working capital statement? We can write it like statement of working capital requirement. It should be like this. You should have particulars, you should have workings, and you should have amount. So in this particulars, what we should write? Current assets. What are the current assets? Regularly as raw material stock, WIP stock, finished goods stock. Some questions it says raw material inventory, WIP inventory, fixed goods inventory, finished goods inventory, and debtors and other current assets, cash required. Right. So other current assets can be more and more. We can call it as total of your current assets. Right. And then current liabilities, trade payables, outstanding expenses, other current liabilities. Based on the question, you can extend the numbers, and this is the total. And now what we should write is net working capital, CA minus CL. If you write here your finished goods stock, raw material stock, work in progress stock, debtors, other current assets and cash, you will get the total of your current assets and your payables, outstanding expense, other current liabilities, the total. And if I call it as A and if I call it as B, my NA, net working capital, is A minus B. And sometimes the question also says, if you want some X as your working capital, you need add safety margin. Safety margin, or they can call it as contingency margin, whatever it is. If you add this, so you'll write here net working capital requirement. This is your net working capital requirement for the business in terms of money. The statement is simple. You should write down all the current assets, vertical format, total it, and then all the current liabilities, total it, and your current liabilities, assets minus current liabilities is your net working capital. To that net working capital will add safety margin. If the question says, generally it says 20% of working capital requirement as a safety margin, 10%, 25%, it can't be more than 25, it will be between 10 to 25%. In the exam it will be given. I've seen many number of questions. So then this is your net working capital requirement. Now comes what is this statement is all about. It can be prepared in two ways: total cost method or cash cost method. So there are two requirements to prepare the statement of working capital. One is total cost method, the other one is cash cost method. So whatever the method it is, the presentation don't change. Only the numbers, the workings will change for cash cost and total cost. What is cash cost and total cost? Now we'll go and understand. Say suppose in my cost sheet, I have raw material consumed, direct wages, direct expenses. I have my prime cost, right? And with my prime cost, I'll add factory overheads, right? In these factory overheads, I'll have depreciation on plant and machinery and other cost. Right, I'll get my works cost. I'm here not talking about opening and closing WIP complete cost sheet. I'm only explaining the concept of total cost. Then what we do administration overheads in this. Again, depreciation on office building, furniture and all, right, plus other cost. So we'll get what? COGS, right. See, after working capital, we'll also get COP. After works cost, we'll also get cost of production when we add or deduct work in progress. And then after cost of production, we'll add or deduct closing finished goods, we'll get cost of goods sold. That entire cost sheet I'm not talking here. I'm talking about total cost and cash cost. Then we'll add, selling expense, selling overheads. We'll get COGS, or we'll get cost of sales. We'll get cost of sales. This is nothing but total cost. So in this entire cost, what we see in here, you have prime cost, you have factory overheads, admin overheads, selling overheads. All these will be part of total cost. Total cost. If the product, suppose say 100 rupees product, we divide the product cost into prime cost, factory overheads, admin overheads, selling overheads, right. This is the total cost. 50, 70, 20 and 20, 40, 30, 50. Yes. So if I divide my total cost into prime cost, factory overheads, admin overheads and selling overheads, and now if I sell 125 minus my total cost 100, I made a profit of 25. However, this cost includes depreciation. This cost includes depreciation. In my factory overheads and in my admin overheads, I have an element called depreciation, which is a non-cash expenditure. So if I compute my profit on total cost basis, it is 25. Assume my here depreciation in factory overheads, depreciation is 5, and in admin overheads, depreciation is 5. Hence, my cash cost will become raw material, I can say prime cost 30, factory overheads excluding depreciation, which is 20 minus 5, 15, admin overheads excluding depreciation 30 minus 5, 25, and selling overheads 20. So my total cost 30 plus 15 plus 25, 70 plus 20, 90. This is my cash cost. Here my cash cost, my total cost is 100, but my cash cost is 90. Why? Because there is an element of depreciation, which is a non-cash cost. Basically, your cash is not stuck. It is not a cost at all for costing records, but for the accounting records, it is a cost because we pay in the initial years, but we charge to P&L on a proportionate basis, either on SLM or on WDV, so that we will keep that provision for acquiring the asset after some period of time. But however, when someone says cash cost basis, your total cost is only 90, not 100. So this entire statement is either to be prepared on cash cost basis or on total cost basis. Now, one more small example I'll give you here is, I'll say prime cost, say 2 lakhs, and factory overheads 3 lakhs, including 50,000 depreciation, admin overheads 2 lakhs, including 20,000 depreciation, selling overheads 1,30,000. Now, what shall I do here is, my total cost is 5 plus 3, 5 plus 2, 7 plus 130, 8,30,000. And my cash cost is 830 minus 70, which is basically 2 lakhs plus 150, 2 lakhs plus 250, 450, 450 plus 180, 630, 630 plus 130, 760. Or I can say 8,30,000 minus 70,000. So total cost takes all the cost including depreciation, whereas cash cost takes only and only the element of cash expenditure, which excludes depreciation. So this is the way we should do the answer, whether total cost or cash cost. Second important thing while preparing the statement is, whenever the question talks about calculate debtors on sales, then your debtor should be sales into, credit sales into, suppose say 2 months debtors out of 12 months. So you'll get 2 by 12, you'll get debtors. If it says sales, compute on sales. Otherwise, we should always calculate debtors on total cost, not on sales. That means sales minus profit, cost of sales. Why it is? Because the money you invested, I'll say, suppose sales are 10 lakhs and profit is 2 lakhs. This 8 lakhs is called as investment in debtors. Your actual investment in debtors is not 10 lakhs. You invested a total cost of 8 lakhs and sold it for 10 lakhs. So your money which is held with the debtors technically is 8 lakhs. The 2 lakhs is your profit. That is also held with them, but that is not spent by you. You only spent 8 lakhs to make a sale of 10 lakhs. So your debtors at cost, I can say here, debtors at cost equals to sales minus profit by 365 into collection period, whatever it is, into collection period. So whenever the sum says compute debtors on sales, you go with sale. Whenever a sum is silent, you always give that debtors are computed on cost. When the question asks you to compute on cash cost, debtors must be computed on cash cost, that is total cost excluding depreciation. So a lot of concepts here we should develop over a period of time is, number one, Total cost includes depreciation. Number 2, cash cost excludes depreciation from total cost. Investment in debtors means sales at total cost or sales at cash cost, depending upon the question, unless the question says compute debtors on sales. But generally investment in debtors means the amount invested in making a sale, which is total cost. If the question is on total cost basis, we will do sales minus profit, and if the question is on cash cost, then sales minus profit minus depreciation, you will get the cash cost. So these are the concepts which we should keep in our mind while computing the working capital statement. Now let us go to ICAA or CMA material and see the first question, how the question can be solved using the working capital statement technique. Now to a quick recap what we discussed, the working capital means what? Working capital means the amount required to run the business, which is generally net working capital, the total current assets minus current liabilities. Current assets, the components are raw material stock, work in progress stock, finished goods stock, debtors, other current assets such as prepaid expenses, advance tax and cash. Less current liabilities, generally the trade payables, includes creditors, bills payable, other payables such as outstanding salaries, outstanding rent, outstanding expenses. All those outstanding expenses are your current liabilities. The net of current assets minus current liabilities constitutes working capital. That is what we should show, which is we will write net working capital equals to current assets minus current liabilities, or we can say gross working capital minus current liabilities, because gross working capital means total current assets. So we discussed about how do we compute net operating cycle, how do we compute each element of net operating cycle, and then we also discussed about how a working capital statement looks like, and what is called a total cost method, what is called cash cost method, and how do we compute debtors on, if the question is silent, you can compute debtors on sales net of profit, that is investment in debtors. But the question says debtors should be computed on sales, then you only use sales. Generally debtors is credit sales into number of days the debtors. It's like credit sales for the year divided by 365 into 45 or 30 or 20. How many days the credit period is given, you should take that dates. So this is all about the basic explanation on working capital statement before we going into and cracking a complete sum on working capital. So now let's work on few questions on working capital management, as we already completed the basic part of knowing about operating cycle, net operating cycle, computation of various components of net operating cycle, consolidating them, and then computing net operating cycle days, and then moving into the format of working capital requirement, total cost, cash cost, lot of concepts. As we are going in a quick recap, so I am going in a quicker way, rapid way, but a detailed understanding about each and every concept. Now if you look at this question talks about, we need to prepare a what you are required to, I always go with what exactly we should do. You are required to prepare a statement showing that working capital needed to finance a level of activity of 60,000 units. So the activity level here is how many units? 60,000 units of activity. Right. They have given cost structure, your raw material, your wages, your overheads, and the total cost of 232 rupees. and selling price 290. Here nothing is told about depreciation. Hence, we are preparing this on total cost basis. And even in the question, it was told that debtors are to be taken at cost. So debtors are also we should take at total cost basis. Now, you go in detail to the question. It says average raw materials are in stock for 1 month. So we need to keep raw materials in stock for 1 month. Work in progress, what it says, half month is a working process stock. But however, always remember, working capital, working progress means what? Material is given. On that, there should be some work to be done to make it as a finished good. Hence, for work in process, material is always 100% complete. What is not complete is labor and overheads. Say I have given the raw material, on that some work to be done in the factory so that this raw material converts into a finished good. So raw material is always 100% given for work in progress stage, wherein some activity is left in terms of labor and overheads to be called as a finished good. So work in progress, what it says, raw materials for 100%, but labor and overheads are 50% complete. If it is 100% complete, that will become a finished good, not a work in progress. So keep it in mind, work in progress, there are levels. Raw material level 100%, others depending upon the stage, it may be 20%, 30%, 40%, 50%, 60, 70 or 90, depending upon the question. If the question is silent about work in progress, percentage of labor and overheads, always assume average by 2. So half. In this question, it is given. And it says finished goods are stocked for 1 month and credit allowed by suppliers 1 month means you can pay 1 month later. You buy today, you pay 1 month later. So your credit period from your suppliers is 30 days and you allow 2 months credit to your customers. So customers will pay you after 2 months. So 2 months your money is struck. Time lag in payment of wages. Wages you can pay half a month means 15 days. After 15 days you can pay the wages. So wages will be given at the month end, you can pay 15 days after. So half a month you can pay wages. Overheads 1 month. Overheads are to be paid in 1 month overdue. And 1/4 of sales are on cash basis. It means a balance 3/4 are only credit sales and cash balance expected 160. So all the data is given. Now what I should do is I need to prepare a working capital statement. Yeah. I leave more space for workings and I'll write here statement of working capital with data, particulars and working amount. So in particulars, current assets, number 1 is raw material stock. It says raw material stock is for 1 month, per annum 60,000, so per month it is 5,000, into the cost of raw material is 115. So 60,000 divided by 12 into 115 is 5,75,000 is my raw material stock. When it comes to work in progress stock, as told you, it has 3 stages: raw material, labor and overheads. Raw material, it says half a month, so 60,000 by half a month, right? So multiply 12 into 2, 24 into 115 is 100%. So 60,000 by 24 into 115, 2,87,500, and labor 60,000 by 24 into, what is the labor cost per unit? 80. So 80 into, it is 50% complete. So 60,000 by 24 into 80 into 0.5, 50%. Your labor is 1 lakh. And your overheads 24 into, what is the overhead cost? 37 into 37 into 50%. So 60,000 by 24 into 37 into 50%, 46,250. So 2,87,500 plus 1 lakh plus 46,250. Your total work in progress is 4,33,750. So how do we compute this? I'm making the entire answer in one go so that you need not waste your time in the examination. Workings are integral part of your presentation. Then comes your finished goods stock. What it says, finished goods? They say finished goods are in stock for 1 month. 1 month. And finished goods are to be valued at total cost. It is very clear. Finished means materials completely used, wages completely paid, and overheads completely incurred. Hence, your total cost is 232, 1 month. So very simple here. Finished goods 60,000 units by 12. So 1 month in stock into 232 rupees. So 5,000 into 232. Your finished goods cost is 11,60,000. Then comes debtors. Debtors, be careful because 1/4 of debtors are for cash. It means balance debtors or credit. Debtors are only for credit sales, not for cash sales. You collect the money the minute you sell. So there is nothing struck. Wherein credit sales, the amount is struck with the customers for how many months? Your credit allowed is 2 months. Now, what we should do here is, per annum the sales are 60,000. Per month it is 5 into 2 months into total cost basis. I told you, right, investment in debtors is the total cost, not the sale price. Though the selling price is, how much is selling price? 290, but you are not invested 290 on debtors. You invested on these goods only 232. So into how much credit sales? Only 3/4. Not full or not cash sales. Sorry, credit sales. 1/4 are cash. So what I did, 60,000 into 2 by 12. 10,000 goods units into 232 total cost is the total sale struck into 3 by 4. So 17,40,000. What we can also do is 60,000 into 3 by 4, 45,000 is the credit sales into 232 overall sale by 12 into 2, you'll get 17,40,000 because only 3/4 are credit sales. So you got 1740. What else? Any expenses given, prepaid? No. Time lag means liability. Overheads lag, liability. So wages and overheads are liabilities, and cash balance expected is 1,60,000. That is also your current assets requirement. Cash is given. I'll say here as given 1,60,000. So you finish your current assets. So the total is 575 plus 433,750 plus 11,60,000 plus 17,40,000 plus 1,60,000. 40,68,750 is your total current asset. So all the components of current assets we recorded. Raw material stock, I am numbering it. WIP stock, finished goods stock, debtors, and cash. So my total amount, this 160 is straight away from the question, right? We are not done any special working here, but we did working for raw material, working for WIP, working for finished goods, working for debtors, and working for no working for cash. So debtors we have taken on cash cost, no, total cost basis. That is sales minus profit, because the question also said debtors must be taken at cost. As I explained, it is the investment and debtors. For every good, my investment is 232 rupees only. Though I sold at 290, but my investment in debtor is only 232. Now it is done. Now I should go to current liabilities. One by one, trade payables, outstanding wages, outstanding overheads. These three were given in the question. Let's go back. Creditors allowed, credit allowed by suppliers 1 month. Suppliers for what? Suppliers for raw material, obviously. So what we should take is 1 month of raw material is in credit. So 60,000 by 12 into 115, exactly 5,75,000. The stock equal to the payable. Then overheads they said, wages they said, time lag is half a month. Half a month in the sense 60,000 by 24 by 12 into 2, or else by 12 by 2. So by 24 into wages is 80. So 60,000 by 24 into 80 is 2 lakhs is wages. Outstanding, payable. And overheads 1 month. Is it 1 month? Yes, overheads 1 month lag. So you can pay after 1 month after incurring the expense. So 60,000 by 12 into 37, if not 37, yes. So 1,87,500. Only 3 liabilities. My total liabilities are 575 plus 2 lakhs plus 187,500, 9 lakhs 62,500 is this is my total current assets, and this is my total current liabilities, B. So now comes my final answer, which is C. Net working capital, which is A minus B totals. So it is 40 lakhs 68,750 minus 962,500, 31 lakhs 6,250 is my final answer. 40 lakh 68,750 minus 9 lakh 62,500 is 31 lakhs 6,250 is my net working capital requirement as per this question. A little correction here in the total. It is a totaling error, which is 60,000 by 12 into 37 coming to 1,85,000. So the total liabilities are 575 plus 2 lakhs plus 185, 9,60,000. So A minus B, 40,68,750 minus 9,60,000 is 31,08,750 is the net working capital requirement. So there is a small correction with overheads because the totaling 60,000 by 12 into 37 is 1,85,000, not 187,500. So with this, the first question is completed. What we presented here: current assets, current liabilities, and the requirement of working capital. This is on total cost basis. In the examination, what we can do is, in notes, we can write 3/4 of sales are on credit and debtors are calculated on total cost, not on selling price. You better give 2 points, because though it is there in the question, we should mention what we did clearly to the examiner. So with this, your first question on working capital, full length statement. We did the first question on NOP, net operating cycle days, but this is the first question on overall working capital statement based on total cost method. The next question what we will be doing is cash cost. What is the difference between total cost and cash cost? That we should learn in the next question, and then we'll do the solution. As we completed the first question on total cost basis, now the second question, very important question, we need to first understand the workings as well before we going into the solution. This question says, if you read the question carefully, depreciation is considered as a part of cost of production and compute the working capital on cash cost basis. There are two things here. So it means depreciation is already there as a part of cost of production. Now let me explain you how the things works here. I think you're able to read the question carefully. Sales, 2 months credit. Materials, 2 months credit to suppliers. Wages, 1 month lag in payment. Cash manufacturing, they are given cash manufacturing expenses 960. Here is the catch. Let us understand how to break this into things like, see, your sales are 36 lakhs. Right. Basically, there are two things here. There is a shortcut, but I want to go in detail this. It says your gross profit is 25%. So if I remove my gross profit in 36 lakhs, 9 lakhs is my gross profit. So my cost of production should be 27 lakhs. I'm talking about cost of production. My cost of production includes various things. Material consumed 36 lakhs. Material consumed 9 lakhs. Material consumed 9 lakhs and wages 720. Cash manufacturing expenses 960. So I can say here raw materials, wages, manufacturing expenses in cash. This is not totaling to 27, right? See, 9 lakhs plus 720 plus 960 totaling to 2580, but my total production cost is 27 lakhs. It shows my depreciation is 1,20,000. But I should not consider this as a cost. So my total cash cost is, cash cost of production is 25,80,000 as cash cost of production. Now, apart from that, out of gross profit, I'll have other expenses. Number one is my administration expense, 2,40,000, and selling expense 1,20,000, and the balance 2 lakh 40 plus 1 lakh 20, 360 minus 9 lakhs. My profit is, my net profit is 540. Net profit. So these two are my cash expenses. So now I can break it into two parts. Number one, cash cost of production 25 lakhs 80,000 and cash cost of goods sold is 25 lakhs 80,000 plus admin cost plus selling cost, which is 29 lakhs 40,000. Now this I use it for finished goods and this I use it for debtors. So though my actual total cost, how much? Total cost of production 27 lakhs and total cost of goods sold 27 lakhs plus 22 lakh 40,000 plus 1 lakh 20,000, which is 30 lakh 60,000. This I am ignoring. This also I am ignoring. Why? Because I am not doing on total cost basis. I am doing on cash cost basis. So this working, your textbook didn't give this working. Why? Because they'll directly go and add 1, 2, 3 and done. But we should understand the complete picture is you have the total sale as 36 lakhs minus all the cost, like 25% gross profit. So into 25% is the gross profit. From 9 lakhs, if I remove administration cost 2 lakh 40 and selling cost 1 lakh 20, my profit is 540. However, I need to remove my depreciation, which is 1 lakh 20 from my production cost and my cost of goods sold. This is the basic understanding of this question. This working note is very, very important before we go and do the working capital statement. Now coming back to the question, you have everything what they said. The company sells products at a gross profit, depreciation considered. It keeps 1 month stock of raw material. So raw material 1 month and finished goods. Finished goods also 1 month. Debtors 2 months credit and raw material suppliers creditors 2 months credit. Yes, and wages 1 month credit and administrative expenses 1 month credit, manufacturing expenses 1 month credit and sales promotion advance. So these are all the data. This is very, very important question in terms of doing the solution, where first identifying the cash cost of production for finished goods, cash cost of goods sold for debtors. Now I'll go and prepare the working capital statement. Statement of working capital requirement. This is particulars, this is workings, and this is amount. Be clear in this. Number one, current assets, raw material stock. What we discussed, it says raw material stock is 1 month. Yearly consumption, materials consumed 9 lakhs and it keeps 1 month stock of raw materials. So out of 9 lakhs, if I come back here, 9 lakhs consumption by 12. So raw material stock is 9 lakhs by 12, 75,000. No WIP. Why? Read the question carefully. It says ignore work in progress. The question itself says ignore work in progress, means there is no WIP. So I can directly go to finished goods stock, which is 1 month again. But I should take cash cost of production, which is 25 lakhs 80,000 by 12. 2 lakh 15,000 is my finished goods stock. Then I'll go to debtors. I'll take cash cost of goods sold 29 lakhs 40,000 and they are on 2 months credit. So 2940 by 12 into 2, 4 lakh 90,000 is the debtors. So we already computed cash cost of production. We already computed cash cost of goods sold. Hence it is easy for us to compute debtors on cash cost. I should always write here cash cost basis because you are preparing this on cash cost. Right. Now coming back to the after debtors, any cash requirement is given in the question? Yes. The company wants a cash balance of 1 lakh and sales promotion paid quarterly in advance. Overall 120, quarterly in advance, advance prepaid expenses. So sales promotion 1,20,000 you pay 1 quarter, which is 30,000, and cash requirement as given 1 lakh. With this, you finish your current assets. 75,000 plus 2,15,000 plus 4,90,000 plus 30,000 plus 1 lakh. So 9 lakh 10,000 is your total current assets. We call it as A. Done with current assets computation. One-on-one raw material, finished stock, debtors, advance sales promotion, prepaid expense and cash. Now comes current liabilities. Creditors, payment to suppliers, payment to creditors, outstanding wages, outstanding manufacturing expense. What else are there? Outstanding wages, outstanding manufacturing expense, outstanding administration expense. Administration expense. So one by one. Raw materials are on 2 months credit. It told here clearly. Suppliers extended 2 months credit. So coming back to the answer, we'll do 9 lakh by 12 into 2. 1,50,000. Outstanding wages are for 1 month. Wages are 1 month. So wages 1 month 1,20,000. So here 1,20,000 by 12 10,000 and cash manufacturing expenses. How much is cash manufacturing expenses? 9,60,000 again for 1 month. Lag 1 month, it is 80,000. And administration expense, which are 2,40,000, are also lag 1 month. So 2,40,000 by 12, 20,000. So it is 1,50,000, 10, 80 and 20. So let us see what is this. Wages 720, not 120. Wages is 720. A little change here. Wages are 720 by 12. It will be 60,000. So wages done. I just want to make it clean. Seven lakh 20,000 by 12. 1 month lag. And manufacturing cash manufacturing 960 by 12. So 9,60,000 by 12, 2,40,000 by 12. So now this total is 1,60 plus 150, 3,10,000. This is total current liabilities B. Now we did everything. We should get net working capital, which is A minus B, 6 lakhs. Add safety margin. In the question they have given safety margin. How much is the safety margin given? 20% safety margin. So coming back to the statement, I'm adding 20% of 6 lakhs. 1,20,000. So your net working capital required, including safety margin, is 7,20,000. If I present this, it is like raw material done 1 month, finished stock again 1 month, debtors 2 months credit, only on cash cost of goods sold and prepaid expense, cash requirement, raw materials 2 months credit, wages 1 month credit, manufacturing expenses 1 month credit, admin expenses 1 month credit. Then we'll get net working capital. Add 20% safety margin, you'll get your net working capital requirement. The crux of the question is this working note. How do you get cash cost of goods sold? If the question asks you to do it on total cost, then your finished goods should be valued at this and your data should be valued as this. So total cost and cash cost is the catch in this particular question, and this is very, very important for examination purpose, especially for CAs. This is important, and CMAs, the previous question which we already did, but CMA chapter textbook, even it is told as cash cost, they are taken debtors on sales, which is a wrong presentation. We can correct it and we can tell that whenever it is cash cost, your data should be on total cost of goods sold, not on sales. With this, we'll jumping to the next question. So let us do one more tricky question, examination question, where you guys can be confused what to take, how to do the sum. With this we will complete the basic working capital statements. Then in the next session we can go to receivable management. So this question will be doing on a rapid basis to complete the basics working capital, the statement of working capital, cash cost, total cost, and this is normal. In this question it says a company plans to manufacture and sell 400 units of domestic appliance per month at a price of 600. The costs are given as follows. See the costs are, you are given selling price 600 and your variable costs are raw material 30% means 180. Direct wages is given as 15%, which is 90. Packing material is given as 10%, which is 60, and overheads, direct expenses given as 5%, that is 30. So your total cost, variable cost is 180 plus 90 plus 60 plus 360, and contribution per unit 240, and fixed overheads is given as 4,32,000 per annum. So we should be very clear in computing the overall cost here. Now if I say overall cost, here the total cost of 4,800 units, how it is? 400 into 12, 400 per month, 12 months. Now variable cost is 4,800 into 360, which is 17,28,000. Fixed cost 4,32,000. Total cost 21,60,000. Now cost per unit is 21,60,000 by 4,800. 450. This is to value the finished goods. So here people will do mistakes. They will take it only the first breakup. They'll forget fixed overheads. So your total cost is 17,28,000. Fixed cost is 4,32,000. Total cost is 21,60. So cost per unit, cost of completed unit is 450. Selling price 600. If you do the sum as total cost basis, your selling price or your debtors should be valued at 450 per unit. If you value at sale basis, your debtors should be valued at 600 per unit. You should give a comment whether debtors you are taking on sales or on total cost. This is very important. Now comes the question. If you see the question, apart from this, packing material, raw material 30 days, packing material 15 days, finished goods 200, finished goods is given 200 units, work in progress 7 days. When it is silent, we always take work in progress, raw material 100%, others 50%. Keep it in your mind. Raw material 100%, other expenses 50%. Then comes your other particulars are given, which is 80% of sales or credit, and 30 days is the debtors collection period, and creditors allowed 2 working days, 21 working days, overheads 15 days. Overheads includes expenses as well as overheads, lag in payment of overheads and expenses 15 days. Cash requirement 12% of working capital, this is safety margin, and working days for 300. Before jumping into the statement, we should plan and do each and every component in working notes. Number 1, raw material. We do it first here, then we post in the final format, because there are so many elements involved. Raw materials will say 4,800 units per annum into 180 is the cost, because cost 180 into how many days? 30 days into 30 by 300. So 4,800 into 180 divided by 300 into 30, 86,400 is your raw material. Then comes your work in progress. Work in progress. One more material is there, packing material, which is 4,800 into 60 into how many days? 15 days. 15 by 300. So 4,000 into 60 into 15 by 300, 14,400. Then work in progress, we should do it for raw material, packing material, variable overheads, raw material, okay, direct wages, direct expense, and fixed expense. So many things in this. Raw material, including packing material, we should take 100%. So raw material is here is 4,800 units into 180 into how many days? 7 days. 7 by 300. $20,160. Packing material 4,800 into 18 into 9 into 60, right? Into 7 by 300. 6720. Then comes your direct wages, 4,800 into 90 into 7 by 300 into 50%. 5040. And direct expenses 4,800 into 30 into 7 by 300 into 50%. 1680. And fixed expense 4,32,000 into 7 by 300 into 50%. 5040. The total is 20,160 plus 6720 plus 5040 plus 1680 plus 5040, 38,640 is the value of WIP. That is the reason why I am doing it without in the working, because that statement in this much of working will not be possible to fit in. This question needs separate working. Once working progress is done, second one is finished goods. Finished goods, there is directly given in the question as 200 units. So if it is 200 units, 200 into 450, total cost we did 90,000 is the value of finished goods. It is simple because we already computed the total cost here, 450 per unit. And then sale, debtors. Debtors, there are two methods. We can go at total cost method. We can go at sale price method. I am doing both. Anything you can give an assumption and do it in the examination. So debtors, it says 80% is credit sales. So 4,800 into 80% into total cost 450 into how many days? 30 days, right? 30 by 300, which is 48 into 80% into 450 into 30 by 300, 1,72,800 if you go on total cost basis, And if you go on sales basis, 48 into 80% into 600 into 30 by 300, 4,800 into 80% into 600 into 30 by 300, 2,30,400. This is on total cost. This is on sale price basis. In the examination, you can give a note what is the basis you adopted. If the question is silent, you can take either total cost or sales, just giving a note. Now we finished all the assets, right? So the assets were done. Raw material, packing material, like raw material, finished goods, work in progress is done, and sales is done. Now the liabilities, if you see, lag in payment of materials, where it is given materials, raw material 30, other particulars, cash sales, creditors allow 21 working days. So creditors here will say creditors. One is for raw material, one is for packing material. 4,800 into 180 is the raw material into 21 days into 21 by 300, which is 60,480, and packing material 4,800 into 60 into 21 by 300, 20,160. So total creditors 60,480 plus 20,160, 80,640 is creditors. Creditors for outstanding creditors. Then comes your wages and direct expense and fixed overheads. 3. What they said in the question. Lag in payment of overheads and expenses is 15 days. Overheads and expenses, all expenses here in labor, direct expense and overheads, all lagged by 15 working days. So wages 4,800 into what is the wage cost? 90 in the breakup. 90, yes. 90 into 15 days, right? 15 by 300, and direct expense 4,800 into 30 into 15 by 300, and fixed overheads 4,32,000 into 15 by 300. Wage 4 into 90 into 15 by 300, 21,600. Expense 4,800 into 30 into 15 by 300, 7,200. And fixed overhead 4,32,000 by 300 into 21, 30,240. So fixed overheads, recompute 4,32,000 by 300 into 15, it is 21,600, sorry. So total is 21,600 plus 7,200 plus 21,600, 50,400. So we did all workings from raw material, packing material, WIP, finished goods, debtors and creditors, and in outstanding expenses. Now based on all these things, let us prepare the final statement. current assets, raw material, WIP, finished goods, debtors, total, current liabilities, creditors, other expenses. I'm clubbing everything at one shot because we did the workings. I'll write here note 1, note 2, note 3, note 4, note 5 and note 6. I'll go back and do the notes. This is note number 6. This is note number 5. This is note number 4. This is note number 3. This is note number 2 and this is note number 1. 1 also I'm totaling raw material and packing material. I'll complete both 86,400 plus 14,400, 1,08,000. 1,08,000. Both 86,400 plus 14,400. 1,08,000. So coming back here, I'll say raw material and packing material. I clubbed into one working notes. So now here I'm also using one more. This is total cost basis. This is sales basis. Just for understanding. Now raw material and packing material 100,800. WIP 38640. 100,800. 38640. Finished goods 90,000. Then debtors, here the catch. Debtors, total cost 172,800. Sale price 2,30,400. So now I finished my assets. 100,800 plus 38,640 plus 90,000 plus 172,800. 4,02,240. Here 100,800 plus 38,640 plus 90,000 plus 230,400 is 4,59,840. I'm cross checking again. 100,800 plus 38,640 plus 90,000 plus 172,800. 40,2240. Perfect. 100,800 plus 38,640 plus 90,000 plus 230,400. 459,840. And creditors for both raw material and packing material put together 80,640. And expenses total 50,400. So 80,640 plus 50,400 is 131,040. 131,040. Now my net working capital, A minus B. This is total A. This is total B. 40,2240 minus 131,040. 2,71,200. 459,840 minus 131,040. 3,28,800. The difference is nothing but 150 rupees of sales. Sales, 4,800 into 80% into 150. 4,800 into 80% into 150 divided by 300 into 30. The difference is 57,600. If you remove 2,30,400, then it is 172,800. So it is like whatever the sale you taken at 600, but here the sale you taken at 450. The difference 150 is in sale at cost and at selling price. That is the only difference. So now you got the net working capital. What you should do? Plus safety margin 12%. 271,200 into 12%. 32544. 328,800 into 12%. 39456. So net working capital required including safety margin is 271,200 plus 32544, 302, 271,200 plus 32544, 303,744. Then next 328,800 plus 39456 is 328,800. So 368,256. So either you can adopt this or you can adopt this. Give a note. This note is debtors at total cost basis. Debtors at sales basis. These two are the very important points to be mentioned. However, guys, understand here, if you ignore fixed overheads, your answer will completely go to a toss. Fixed overheads is very important here, because in this question the 30, 10, 15, 5, 30 plus 10, 40 plus 20, 60% is variable cost, 40% is contribution. So contribution is before fixed cost. Total cost is variable cost plus fixed cost equals to total cost. That is the catch in this question. Many guys miss this. Will do the finished goods at 60%, then the answer is gone. You will lose your marks, though the presentation is correct. So here WIP also includes raw material, packing material, direct wage, direct expense, fixed expense. One more catch here. Some books will say only direct material 100%, all others are 50%. But here I assume material at 100%, raw material and packing material, others at 50%. That also you can do by giving a assumption. With this, finish the basic explanation on working capital, the first statement, cash cost basis, and component versus component type from a textbook. So all the rapid sessions on basic working capital excluding receivables, receivable management, inventory management, and creditor management and cash management. This component of working capital is finished. Study well, work hard, do the sums. If at all you have any problem, you guys can reach out to me at 95505 23111 with queries on WhatsApp. But you will get answer only in 24 to 48 hours time. Don't expect instant answers because my time is packed. Thank you. We'll meet with another video on receivable management as a part of working capital, inventory management as a part of working capital, cash management as a part of working capital, creditors management as a part of working capital. See you.